Shall we rise for the national anthem? Thank you. Shall we all be seated? Good afternoon, Madam VC, our special guest of honor, Pro-VCs, provosts, deans and directors, heads of department, UG faculty, Bank of Ghana staff, invited guests, students, and friends of the university. On behalf of the organizing committee, led by Professor Witwatersrand, it is my great pleasure to welcome you to this important occasion, the inaugural lecture for the Bank of Ghana Chair in Finance and Economics. My name is Nkechi Owu from the Department of Economics, and I have the honor of co-moderating today's event with my esteemed colleague, Dr. Emmanuel Akins Abaka from the University of Ghana Business School. He will come up to the podium later. This inaugural lecture celebrates academic excellence, institutional collaboration, and our collective commitment to strengthening the relationship between research, policy, and practice in Ghana's financial and economic landscape. We are delighted to have in attendance several dignitaries, scholars, and professionals, all of you who contribute meaningfully to these domains. We would like to begin the program with opening remarks by the head of the Department of Economics, Professor Edward Nketia Amponsa. Professor Nketia Amponsa, please. Shall we welcome him with a round of applause?
Vice-Chancellor of the University of Ghana, Professor Appiah Amfo, Registrar, Provost of the College of Humanities, and the Provost of the College of Basic and Applied Sciences, Registrar, distinguished special guest and Governor of the Central Bank, Dr. Johnson Pandit Asiama, esteemed guests from the Bank of Ghana, deans, directors, and heads of departments, faculty members and staff, distinguished guests, students, ladies and gentlemen, friends from the media, good afternoon, and a very warm welcome to you all. It is a distinct honor to welcome you to this historic occasion, the inaugural lecture for the Professorial Bank of Ghana Chair in Finance and Economics, hosted by the Department of Economics of the School of Social Sciences and the Department of Finance of the University of Ghana Business School. The inaugural lecture, titled From Cowries to Crypto, the long arc of monetary policy in Africa, is not just an academic event, but also a celebration of knowledge, progress, and the enduring relevance of monetary policy in shaping the trajectory of our societies. This afternoon's event marks a significant milestone not only in the academic journey of our esteemed colleague, Professor Yegandi Imhotep Alagidede, but also in deepening collaboration between academia and our nation's central bank. This partnership with the Bank of Ghana represents a forward-thinking investment in research, policy, and human capital development. I am delighted that we have gathered here today to witness an intellectual discourse, one that traverses centuries of Africa's monetary history, from the use of cowries as a currency in pre-colonial trade networks to the emerging influence of cryptocurrencies in the digital age. No other topic could have been more appropriate or consequential as we consider Africa's place in the evolving global financial architecture. The establishment of this professorial chair speaks to our shared commitment as scholars and policymakers to address the critical economic, financial, and monetary policy challenges of our time through evidence-based research, robust dialogue, and informed innovation in central banking. I'm especially excited about the fact that this chair is situated within the Department of Economics and that of Finance. The Department of Economics in particular has over the years trained and nurtured some of the nation's finest economists, including most of the governors of the central bank. Permit me to give these governors the needed honor: Dr. Kwabena Dufour, Dr. Paul Akwa, Dr. Kofi Wampa, His Excellency Parkwesi Bekwia Mr. Arthur of blessed memory, Dr. Enders Addison, and last but not the least, the current governor, Dr. Johnson Pandit Asiama. The bank's sponsorship of this chair and Professor Alagidede's appointment as the first occupant affirm the shared tradition of excellent engagement and service. As we adore the chair this afternoon, the Departments of Economics and Finance would like to assure the management of the central bank and that of the university that we will provide the chair with the requisite academic environment and logistical support to deliver on his mandates. We are eternally grateful to the Bank of Ghana for its vision and support, and we trust that this chair will contribute significantly to national and global discourse on economic stability, financial inclusion, and sound monetary policy management in Ghana and other emerging economies. Then we take this opportunity to reiterate our heartfelt appreciation to the Bank of Ghana for its continuous support to the department in the areas of capacity development and infrastructure, culminating in the commissioning of the Cedi Conference Center donated by the bank in 2016. This is where we are currently sitting. Yeah. Based on the principle or assumption of non-satiety, which is characteristic of indifference curves, the Department of Economics would like to appeal to the bank to consider funding the second phase of the Cedi Conference Center to further deepen our shared vision in capacity development and collaborative research. The department is prepared and ever ready to collaborate with the central bank to offer tailored short courses in areas such as applied management and statistical analysis and advanced econometric modeling to young researchers from the central bank. To our esteemed inaugural lecturer, Professor Yegandi Imhotep Alagidede, we say congratulations once again. We eagerly look forward to the insight you will share this afternoon. I wish to express my deepest appreciation to the outstanding work done by the planning committee. Thank you for your time, efforts, and the excellence with which you carried out your responsibilities. The committee, chaired by Professor Festus Ebotex, is composed of faculty and staff from the Department of Economics and that of Finance. Permit me to mention the members of the committee: Professor Nkechi S. Owu, Dr. Frank Ajiritete, Dr. Gloria Afo-Mensah, Dr. Emmanuel Ni Abe, Dr. Wasu Abdul Rahman, Professor Yegandi Imhotep Alagidede, Dr. Emmanuel Joel Akins Abaka, Ms. Susanna Adobia Yamoa, Mr. Yao Yeboa, Ms. Eugenia Nyedua, and last but not the least, Ms. Abigail Ewusi. Ladies and gentlemen, thank you once again for joining us. May this afternoon's inaugural lecture inspire, inform, and intellectually enrich us. Thank you.
Thank you very much, Professor Nketia. At this point, we will take the remarks from Provost. But before we do that, we will recognize dignitaries in our midst here this afternoon. We have members of the Board of Directors of Bank of Ghana, Dr. Fritz Cockle. Please, can you give us a wave? All right, thank you. We also have Honorable Isaac Adongo, also in our midst. We also have advisors to the governor. In our presence this afternoon is Dr. John Kwachi, Dr. Francis Kuma as well. Thank you. Because of time, we also have directors of BOG, heads of department, and staff of BOG. Please give us a wave and let's acknowledge you. Thank you for coming. We are glad to have you here. We also have faculty from University of Ghana. We have our heads of department, the professors in our midst. Please, can you give us a wave? All right. Thank you very much. So we have the QR code for the program in case you want to have a copy of the program. Please project it so that those here can scan it and have access to the program. Thank you very much. At this point in time, we will hear from the Provost of the College of Humanities, University of Ghana, and the person of Professor Joseph Yaro. Shall we welcome him with a clap? Thank you.
Madam Chair, the Vice-Chancellor of the University of Ghana, our special guest of honor, Dr. Johnson Pandit Asiama, teams and heads of departments, distinguished faculty, our guest, the Bank of Ghana, students, invited guests, members of the university community, you are all welcome. I would like to take this opportunity to welcome you all to this inaugural lecture and the launch of the prestigious Bank of Ghana Chair in Finance and Economics at the University of Ghana. As you know, the vision of the University of Ghana is to be a leading university recognized globally for knowledge creation and technological innovation. And its mission is to provide high-quality education and training that fosters networking, partnership, collaborations with other institutions and industries. Hence, I hold in high esteem the continual partnership between the Bank of Ghana and the University of Ghana, which we are here to strengthen further. I firmly believe this partnership will grow stronger and yield positive outcomes that will benefit the university, the community it serves, the private sector, and the Ghanaian economy as a whole. I wish to express my sincerest gratitude to both the past and current leadership of the University of Ghana Business School, as well as the Departments of Finance and the Departments of Economics, for their vision and commitment in driving this remarkable initiative. I firmly believe that the establishment of the Bank of Ghana Chair in Finance and Economics represents a significant step towards strengthening the collaboration between academia, particularly within the College of Humanities, and industry. It is precisely this kind of strategic partnership that will enhance research relevance, policy impact, and the practical training of our students. As already mentioned, today's topic, which is very innovative, reads From Cowries to Crypto, the long arc of monetary policy in Africa. When I saw this first, I was eager, and still I'm eager, to hear what the speaker, Professor Yegandi Alagidede, has to say. I chose to pick up the words that represent the Cowries. That said, allow me to share a few brief thoughts of my own. As we know from the early use of cowries and barter systems, as a geographer in sixth form, these are the things we learned. African societies have always found creative ways to facilitate trade, to store value, and to build trust. These systems were deeply rooted in communities and served as foundations of early commerce. With colonization came imposed currencies and foreign monetary systems that often stifled local enterprise and tied African economies to distant centers of control, as we still have, especially for Francophone Africa. Yet, post-independence Africa began to reclaim this monetary space through establishment of central banks, the management of inflation, and efforts to stabilize currencies. This was a vital step in laying the macroeconomic foundations for growth. I hope this still holds as we are being threatened with tariffs to comply to a new order. Today, we stand at another transformative movement, the rise of digital assets. There is central bank digital currencies, cryptocurrencies, mobile money, blockchain, from M-Pesa in Kenya to Momo in Ghana to Nigeria, e-Naira, and of course the growing presence of crypto platforms. Africa is once again innovating. I'm sure the speaker will tell us whether we are innovating in the right direction or in a circular direction. These tools present new opportunities to expand financial inclusion, lower transaction costs, increase transparency, and empower the informal sector, all of which are crucial drivers of economic growth. But of course, innovation alone is not enough. Effective and adaptive monetary policy must guide these tools. We must ensure that they serve development, they protect stability, and they promote inclusive prosperity. So as we reflect on this long arc from cowries to crypto, let us recognize the power of thoughtful monetary policy in shaping Africa's economic destiny. Let us use history as a guide, technology as a tool, and vision as a compass for growth. Thank you.
Thank you, Professor Yaro, for those very thoughtful words. We will now invite the Dean of the University of Ghana Business School, Professor Ernest Tweneboa Kodua, to kindly introduce our chairperson for this afternoon's event. Shall we welcome him with a round of applause?
Good afternoon, ladies and gentlemen. Madam Chair, please permit me to stand on the existing protocol. I believe he's strong enough to stand on it. I'm honored to introduce the chairperson for this program. The chairperson is the first female Vice-Chancellor of the University of Ghana. She's a professor of linguistics, an accomplished administrator, and brings over 2 decades of experience in the higher education sector. Within the University of Ghana, she has held several key leadership positions, including Pro-Vice-Chancellor for Academic and Students Affairs, founding Dean of the School of Languages, and Head of the Department for Linguistics. As Vice-Chancellor, she is championing the integration of technology across the university's operations while ensuring that people remain in the heart of its mission. The chairperson has received numerous accolades for her contribution to education, leadership, and empowerment of women. Most recently, she was named Ambassador for Gender Equity and Social Inclusion by Association of African Universities. She is a fellow of the Ghana Academy of Arts and Sciences and an active member of several esteemed academic and professional organizations. She is also the founding president of the African Humanities Association and president of the International Federation for Modern Languages and Literatures. Additionally, she served as the vice chair on boards of both the African Research University Alliance and the Worldwide University Network. Ladies and gentlemen, join me to welcome
Professor Appiah Amfo, the Vice-Chancellor of the University of Ghana.
Thank you, Mr. Dean. I believe this is your first public assignment as Dean. Our special guest and Governor of the Bank of Ghana, Dr. Johnson Pandit Asiama, members of the board of our central bank, our distinguished lecturer for this inaugural lecture, Professor Yegandi Imhotep Paul Alagidede, Madam Registrar, Mrs. Emilie J. Mensah, Provost of the College of Humanities, our deans, directors, heads of department, faculty members, our esteemed guests from the Bank of Ghana, members of the academic and policy communities, our dear students, the press, distinguished ladies and gentlemen. The head of Department of Economics attempted to welcome you here. He only got as far as the department. And it is my privilege to welcome you to the University of Ghana, the premier university of this country. It is with immense pride that I chair this landmark event, the inaugural lecture for the University of Ghana, Bank of Ghana Chair in Finance and Economics. This is an occasion that marks not only an academic milestone, but a significant step towards reimagining the role and relevance of Africa's economic scholarship. In forging this important partnership between the University of Ghana and the Bank of Ghana, we have established a collaborative platform that embodies our shared aspiration to produce knowledge that is both locally grounded and globally resonant. This chair, hosted by the Departments of Economics and Finance, the Department of Economics in the School of Social Sciences, and the Department of Finance in the University of Ghana Business School, represents a bold commitment to driving research innovation, fostering policy engagement, and nurturing future leaders in the fields of economics and finance. The establishment of the Bank of Ghana Chair demonstrates a profound recognition by both institutions of the imperative required for scholarly work that is relevant to the African context. Historically, a significant portion of Africa's monetary and financial structures have been influenced by legacies and frameworks adopted from external sources. Although these models commendably contribute to economic stabilization, they frequently fail to accurately reflect our distinct realities, aspirations, and resource bases. Therefore, we are pleased to acknowledge that the inaugural holder of the chair, Professor Yegandi Alagidede, not only possesses an outstanding academic record, but he also offers a visionary outlook rooted in African agency and innovation. Allow me on behalf of the university to express our deep appreciation to the governor and the board of the Bank of Ghana for their exceptional vision and partnership. We recognize the former governors and deputy governors who have been involved and the current governor who has ensured that there is continuity. The chair extends beyond funding. It requires us all to reassess the fundamentals of economic research, policy advice, and capacity development. Essentially, this initiative aims to establish a link between rigorous academic investigation and policy making that actively promotes industry growth, job creation, and widespread development. In accordance with the terms of our collaboration, the Chair shall conduct research in the areas of financial intermediation, monetary and fiscal policy, and financial regulation. Additionally, it will commission studies directly pertinent to Ghana's evolving needs and opportunities. The mandate further encompasses the development and mentorship of emerging talent, the leadership of innovative research groups, the preparation of locally focused case studies, and the dissemination of findings through high-quality publications and public lectures. So you can expect that this is the first of many. This intentionally comprehensive approach aims to position the University of Ghana and its partners at the forefront of international discourse on financial and economic transformation. I am happy to note that the establishment of the UGBOG Chair in Economics and Finance also aligns with the university's second strategic priority, focused on impactful research that addresses both local and global development challenges, as well as our fourth strategic priority, which aims at strengthening our engagements with strategic partners to amplify our research and advocacy for greater good. The theme for this inaugural lecture, which we heard earlier, From Cowries to Crypto, the long arc of monetary policy in Africa, powerfully captures both the depth of our history and the scale of our ambition. Professor Alagidede's research does not merely critique the status quo. It offers forward-looking paradigms that interrogate the adequacy of inherited monetary doctrines. Professor Alagidede introduces us to a new paradigm he terms metanomics, a transformative framework that fuses indigenous African monetary logic with contemporary tools such as blockchain, digital credits, and algorithm policy design. This model offers an exemplary framework for leveraging Africa's abundant resources as a foundation for currency stability, inclusive growth, and sustainable prosperity. I strongly urge all present, including policymakers, industry leaders, researchers, and students, to thoughtfully consider the overarching message. Africa's development will be determined not by emulating external strategies, but by forging a path rooted in our own assets, intelligence, and aspirations. As the Vice-Chancellor, I restate the University of Ghana's unwavering commitment to providing the intellectual freedom, infrastructural support, and collaborative environment necessary for the Bank of Ghana Chair and its associated research ecosystem to flourish. We expect this initiative not only to enrich academic curiosity, but to inform national policy, inspire business leadership, and create a vibrant pipeline of finance and economics professionals equipped to meet the challenges and opportunities ahead. In conclusion, I would like to extend my sincere gratitude to all individuals who have contributed to the realization of this vision. The Bank of Ghana, its governor, former governor, and deputy governors, our heads of departments and deans of schools, so the former and current head of the Department of Economics, and the former and current heads of the Department of Finance, as well as their respective deans, faculty members, administrators, and most importantly, the scholars whose work will influence this chair for many years to come. Let us acknowledge this partnership as the inception of a new era of indigenous, globally acclaimed thought leadership in the fields of finance and economics. Thank you for your presence, partnership, and confidence in our collective future. Thank you for your attention.
Thank you very much, Prof. Amfo, for your added and most gracious welcome. Thank you also for those very insightful remarks. We will now invite Professor Ejapoma Jekedakut from the Department of Finance at the University of Ghana Business School to introduce our special guest of honor. Shall we welcome her?
Madam Vice-Chancellor and Chair, kindly permit me to stand on the existing protocols while I introduce our special guest of honor for this occasion. Dr. Johnson Pandit Asiama is the Governor of the Bank of Ghana, a position he assumed in February 2025 following his appointment by the President of the Republic. A distinguished Ghanaian economist, Dr. Asiama brings to the role over 2 decades of experience in central banking, financial regulation, and macroeconomic management. Throughout his career at the Bank of Ghana, which began in 1996, Dr. Asiama served in various leadership capacities across banking supervision, financial markets, and research departments. In 2016, he was appointed second deputy governor, where he played a critical role in coordinating the Monetary Policy Committee and advancing key reforms in monetary operations, banking regulation, and financial inclusion. His leadership continues to focus on promoting price stability, financial sector resilience, and institutional independence. Dr. Asiama holds an Amfo in economics from the University of Ghana, Legon, and a PhD in economics from the University of Southampton, UK. His research and professional interests span monetary economics, financial stability, and risk management, forming the backbone of his policy decisions. Prior to his appointment as governor, he served as director of the macro management department at the West African Institute for Financial and Economic Management, WIFM, where he led regional policy training and advisory programs for central banks and Ministry of Finance across ECOWAS member states. Since assuming office as governor, Dr. Asiama has provided steady leadership in a period marked by post-crisis macroeconomic adjustment. Under his stewardship, the Bank of Ghana has worked closely with the Ministry of Finance and the IMF to restore macroeconomic stability, culminating in the successful completion of a 4th review under Ghana's extended credit facility. His leadership has contributed to restoring market confidence, stabilizing the Cedi, and anchoring inflation expectations. Dr. Asiama's policy legacy includes pivotal contributions to Ghana's financial legal framework, particularly the enactment of the Banks and Specialized Deposit-Taking Institutions Act and the Deposit Protection Act. As governor, he continues to prioritize sound supervision and systemic risk management while promoting innovation and digital transformation in the financial sector. His role in establishing the FinTech and Innovation Office and the Payment Systems Department reflects his commitment to future-proofing Ghana's financial architecture. As governor, Dr. Asiama remains focused on strengthening institutional governance, ensuring transparency in policy communication, and deepening financial markets to support Ghana's economic transformation agenda. I would like you to please join me to welcome the Governor of the Bank of Ghana, Dr. Johnson Pandit Asiama.
Thank you very much for those kind words. Good afternoon. Your good afternoon is not very strong for me. I know we left lunch a while ago. Good afternoon. That's better. Thank you very much. So I'm standing on the earlier protocols. Madam Vice-Chancellor, Professor Edward Nketiah Mposa, Professor Alagidede, esteemed faculty of the Departments of Economics and Finance, distinguished colleagues from the Bank of Ghana, students, members of the media, invited guests, ladies and gentlemen. So I'm happy to join you this afternoon, coming back to campus for this special occasion at Ghana's premier university, which is also my alma mater. And I remember too well 1990 when I stepped foot on this campus, when I took those courses through the economics department. And as I was driving here today, the names of those lecturers that taught us kept ringing in my mind. And I kept asking myself, where is Dr. Jackson? Where is Dr. Asante? Dr. Gokel is here, and that's the good part. Where is Dr. Chikata? Several of them. People that have contributed to make us who we are today. And I am grateful. This is an institution that continues to nurture some of the finest minds in our country and across the continent. And on behalf of the Bank of Ghana, I bring warm greetings and extend our deepest appreciation to the University of Ghana for this enduring partnership and for hosting what we consider a milestone event in the advancement of economic thought and policy. To those of us in public service, the ability to share ideas with academia is not a luxury. It is a necessity. Because policy without intellect, as they say, is blind. And theory without policy, they say, is sterile. The partnership between the University of Ghana and the Bank of Ghana, therefore, is not just ceremonial, it is foundational, and this must continue. Today's inauguration of the Bank of Ghana Chair in Economics and Finance is therefore more than the launch of a title. It is a clear signal of our long-term commitment to knowledge, commitment to research, and to the nurturing of a new generation of thinkers who will shape the financial architecture of tomorrow. In supporting this chair, the bank affirms three enduring values, and permit me to outline these. First, our belief in knowledge development and capacity building. Sound monetary policy rests on strong intellectual foundations, and this chair will serve as a catalyst for cutting-edge research in inflation dynamics, exchange rate management, digital finance, regulation of virtual assets, and the evolving contours of financial stability. Second, our mission to bridge the gap between policy and academia. And by this, we live in a world where economic decisions must be informed by data. They must be shaped by context, and they must be grounded in real-world experience. Colleagues, this platform creates space for rigorous scholarship to inform policy, and for policy in turn to challenge and inspire scholarship. And third, our commitment to supporting future economists and policymakers. We hope that this chair becomes not only a center of research excellence, but also a magnet for mentoring, for inspiration, and for critical thought for students across Ghana and Africa. Colleagues, it's a fact that university-based chairs such as these have long been the bedrock of forward-looking policy in leading economies. By establishing this chair, we join that tradition and we add our own uniquely Ghanaian voice to the global discourse on monetary policy and economic development. Let today mark the beginning of a new intellectual journey, one that will echo far beyond those walls into policy chambers, financial institutions, and the hearts of young economists still finding their own voice. So now from cowries to crypto. The evolution of money is also the evolution of trust, and nowhere is that journey more textured and instructive than here, right here in Ghana. Long before central banks and silicon chips, the people of this land, our land, exchanged value through barter. They used yams, they used cloth, salt for cola. As our economy matured, cowries emerged as a widely accepted medium of exchange across West Africa. Cowries were more than shells. They were social contracts. They represented trust, obligation, and the beginnings of what we now understand as money. With the intrusion of colonialism came foreign coins, Spanish doubloons, Austrian thalers, and the ubiquitous British pound. Over time, Ghana's financial sovereignty became entangled in the currencies of others. And that's why the introduction of the Ghana Cedi in 1965 was not just a currency change. It was an act of economic self-determination. It was a declaration that Ghana would define its own economic path. This journey from cowries to colonial coinage to the Cedi tells a story of resilience and adaptation. And today, we are living through another turning point in the history of money, and that is the digital revolution. Across Africa, mobile money and fintech platforms have reshaped how people send, how people receive, and how people store value. And Ghana is among the global leaders in mobile financial innovation, with mobile wallets outnumbering traditional bank accounts. The promise of digital inclusion is real, and it is reshaping how young people, smallholder farmers, and entrepreneurs engage with the financial system. Yet, alongside this promise, there are new uncertainties. Cryptocurrencies have entered our markets without borders, without central issuers, and often without regulation. They challenge the core functions of central banks to issue trusted money, safeguard financial stability, and anchor public confidence. And this is why at the Bank of Ghana, we have not stood still. We have launched a pilot of the ECD, making Ghana one of the first countries in Africa to explore a central bank digital currency. We are finalizing regulations currently for virtual asset service providers, or what is known as VASPs, to bring transparency and order to crypto-related activity. And through your fintech, our fintech regulatory sandbox, we are inviting innovation to flourish, but within a framework that protects the system and the consumer alike. So the theme from cowries to crypto is not just historical, it is directional. It reminds us that money is not a static invention. It evolves, and with the needs, the technologies, and trust of the people. Our job as regulators, as academics, and as citizens is to shape that evolution with wisdom and to ensure that innovation serves inclusion, that digital tools expand opportunity, and that the Ghana Cedi, whether in coin, note, or code, remains a symbol of national confidence and continuity. Colleagues, let us honor our past by securing our monetary future, and we do this together. Distinguished guests, ladies and gentlemen, as we reflect on the historical journey of money, from cowries to crypto, it becomes clear that the context within which African central banks operate today is vastly different from even 2 decades ago. It is a context that is shaped by both daunting challenges and promising opportunities. Indeed, over the last 2 decades, Africa has made considerable progress in stabilizing inflation. From an average inflation rate of around 10% in the 1980s and 1990s, some countries were able to bring inflation below 10% by the middle of 2010s. This reflected better monetary policy frameworks, improved fiscal coordination, and more credible institutions. Yet, recent shocks have reminded us how fragile these gains can be. Remember the COVID-19 pandemic, Russia's invasion of Ukraine, supply chain disruptions, and climate shocks, and how these have all contributed to inflationary pressures and exchange rate volatility. Most economies in sub-Saharan Africa are small and open, and the high share of food and energy in our consumption baskets means that any external shock quickly translates into domestic inflation. In Ghana's case, we experienced this vividly in 2022, as you remember, when inflation reached 54.1%, and the Cedi depreciated by over 50%, one of only 2 currencies in Africa to experience such a severe decline. Food inflation alone spiked to nearly 60%. And these are not just statistics, they are experiences that we lived, experiences that affected household incomes, it eroded savings, and it shook confidence in the financial sector. What these shocks underscore, colleagues, is the absolute necessity of credible institutions and agile, data-driven policy. We cannot always prevent global disruptions, but we can control our response. The resurgence of the Cedi in 2025, appreciating over 42% year to date, supported by over $11 billion in international reserves, is evidence of how disciplined policy coordination between the central bank and fiscal authorities, of course supported by an IMF program, can deliver results. And to sustain these gains, we must continue to invest in our institutional capacity, particularly in research, in forecasting, and in risk analytics. Central banks must evolve into intelligence-driven organizations that are capable of anticipating shocks and crafting forward-looking policies that are both adaptive and inclusive. However, even as we modernize, we face new dilemmas. Central banks today must balance price stability with financial stability, while also navigating increasing government reliance on domestic financing. Across the region, we see a sharp rise in banks' holdings of government debt from 20% of credit portfolios in 2010 to over 35% in 23, and Ghana mirrored this trend. As of June 30th, 2025, total gross loans by banks in Ghana stood at a little over 89 billion Ghana cedis, while investments in government or Bank of Ghana or Government of Ghana securities amounted to 162.9 billion. This reflects a worrying skew towards risk-free assets which crowd out private sector credits and dulls the potency of monetary policy transmission. But as we are beginning to realize, an era of persistently high interest rates cannot be sustained. It is now time for banks in Ghana to begin re-evaluating their business models, not only to protect margins, but to serve the broader economy. Our banking sector must become a catalyst for growth with more targeted and productive lending to Ghanaian enterprises. And I have already declared that before the end of my 4-year tenure, my dream is to see lending rates at no more than 10%. We also face a critical challenge in managing exchange rate regimes. While many countries claim to float their currencies, in practice, there is a growing fear of depreciation. This de facto resistance to floating limits policy flexibility and can fuel credibility gaps. As a region, we must be honest about this divergence and work toward exchange rate frameworks that are transparent, rules-based, and frameworks that are credible. And I was in a conversation earlier this morning at a meeting, and we were discussing the Cedi dollar rate and how, of course, Cedi versus other currencies, and how it works in Ghana. We are using a managed floating framework, and I believe all of us understand what that means. And under managed float, at least the currency must move, isn't it? It is different from a fixed exchange rate. But there's this interesting phenomenon in Ghana which we really need to work to change. Currency moves in one direction, everybody moves with it. The moment the Cedi gets to 10.7 tomorrow, everybody says then it's going back to 15.0. And I ask why. The exchange rate, we keep saying, is an endogenous variable, particularly under the framework that we are working with. And so that Cedi dollar rate must move. On a daily basis, it must move. A colleague gave the example that he was in a queue in South Africa to change some dollars. They were in a queue. And right when he was in the queue, they were told the exchange rate had moved. And that's the beauty of it. But in Ghana, let the exchange rate move in a day. There's total news all over the country why the Cedi has moved. And yet the Cedi must move. When the exchange rate is flexible, it protects the economy against shocks. And so must it be. Our preoccupation is to ensure that those movements are not excessive. And that is what we commit to do. We do not target any band. We do not target any fixed level. Our objective is to ensure, and let me emphasize, that we do not have movements that are excessive. So that is why we have partnerships like this one with the University of Ghana. And we see this as so vital. Universities are not just training grounds, they are idea factories. And we want to see more of your advocacy. We want to see you come in the news and explain things to our people. The appreciation of the city so far, Ghanaians are interpreting this differently, and it's part of the problem. People who used to send remittances for projects have suddenly stopped. And so we have observed a near 50% decline in remittance inflows. And by the way, if you are doing projects in Ghana, cement prices must also adjust, not so. Inflation is coming down. So the price of those building items must also adjust. And so therefore, on the balance, it shouldn't matter. But the appreciation means something different to others. And we are doing all we can now to educate the Ghanaian populace that when the currency appreciates, and we ensure that that appreciation is not persistent, we ensure that that appreciation is not real, in real terms, and persistent. In other words, it is not misaligned for too long, then we can live with that. But we need research institutions like yours to help us educate the populace. Someone told me this morning we need to do a road show across the top remittance, originating countries. Most of the countries where Ghanaians are, we need to go and explain to them to continue sending their monies, regardless where the exchange rate is. So we at the Bank of Ghana welcome the intellectual scrutiny that comes from scholars and students alike. Therefore, let us use this chair not just as an honor, but as a platform for collaboration on inflation modeling, on digital currencies, on financial inclusion, and beyond. Because the future of monetary policy in Africa will depend not only on how we respond to crisis, but how we prepare for the opportunities ahead. Distinguished colleagues and esteemed scholars, the inauguration of the Bank of Ghana chair at the University of Ghana is not a beginning, it is a continuation and deepening of a long-standing relationship between two institutions that have shared responsibility for national development. Over the years, we have forged meaningful academic linkages, providing internships for students. We had guest lectures by central bank officials, research supports, and co-hosting policy dialogues that have informed both classroom instruction and macroeconomic policy making. But we are only scratching the surface of what this partnership can achieve. Our vision going forward is ambitious and yet achievable. One, we want to launch joint research initiatives in areas such as inflation targeting, exchange rate management, digital finance, regulation of virtual assets, and monetary policy transmission. Two, we want to create policy labs and data partnerships that allow faculty and students to work with real-time data sets, contributing meaningfully to the design and calibration of policy. And three, to support curriculum development that strengthens training in central banking, risk governance, and macroprudential policy, ensuring that Ghana's universities become the cradle of future-ready economists and policymakers. And today, I am pleased to announce a bold new initiative, an initiative that builds on this commitment. And I'm calling it the Governance Future Leaders Fellowship. Under this initiative, the Bank of Ghana with the chair will identify high-performing university graduates, graduates with exceptional potential in economics, in finance, and in public policy. These young leaders will be offered structured pathways to top global institutions through scholarships, internships, and policy immersion opportunities. But the objective in this is clear, and the objective is that they will return home. They will return to build. They will return to lead, and they will return to support the effort back home. We want to ensure that the next chapter of Ghana's economic transformation is written by Ghanaians who understand both global dynamics and national aspirations. Ladies and gentlemen, now permit me to turn to Professor Alagidede and the broader academic community. To you, Professor, I offer both congratulations and a charge. You have been entrusted with a chair named after one of Africa's great monetary pioneers. May your tenure here push the frontiers of monetary research in Africa with rigor, with creativity, and with relevance. We want you to use this platform to mentor a new generation of Ghanaian economists, women and men, who will not only theorize, but act, and who will not only publish, but shape policy. Let the chair become a beacon of bold, evidence-based policy thinking that serves both the classroom and the boardroom. To the students here today, I extend a challenge to you. Do not sit on the sidelines of national discourse. We urge you to read the monetary policy statements we put out there. We urge you to debate the fiscal strategy documents or the budget statements that are put out there. We urge you to ask the hard questions. Develop the courage to contribute ideas. Because economics, in its highest form, is a tool for transformation, not just theory, but a bridge between data and dignity, between policy and progress. And Ghana needs you. Ghana needs your passion. Ghana needs your intellect and your ambition to imagine and deliver a better economic future. So let this chair be your rallying point, your intellectual home, and your launch pad. Distinguished Vice-Chancellor, faculty, students, colleagues, and guests, let me, on behalf of the Bank of Ghana, warmly congratulate the University of Ghana and the Department of Economics and the Department of Finance on this historic milestone. That is the formal establishment of the Bank of Ghana Chair in Economics. This is not just a ceremonial event, as I've said. It is a strategic investment in Ghana's intellectual sovereignty and policy future. To Professor Alagidede, we say, you carry not only the responsibility of scholarship, but the burden of relevance. We trust that you will steward this role with the intellectual boldness and institutional maturity that it requires. And now, by the powers vested in me by the board and management of the Bank of Ghana, I have the honor and privilege to declare the Bank of Ghana Chair in Economics and Finance officially inaugurated, and today's inaugural lecture formally open. So as you listen to the discourse that follows, I encourage each of you, students, faculty, practitioners, to do so with open minds and sharp curiosity. Engage, question, reflect, and reflect. Because it is only through honest, rigorous dialogue that we shape ideas worth implementing. Let us celebrate not just an appointment, but the possibilities it unlocks for our research community, our policy landscape, and our collective national journey. I thank you all for your attention. Thank you.
Thank you very much, Dr. Asiama, for those forward-looking, instructive, and encouraging remarks. And may I humbly add that it is always a pleasure to welcome you back to your alma mater. Now, at this juncture, to celebrate the richness of the Ghanaian culture, we present a short cultural performance by the Ghana Dance Ensemble. Please enjoy.
Thank you very much. Let's give it out to them. Thank you very much. Thank you very much. Thank you very much. All right, thank you. Let's give it one more time to them. Wonderful. Thank you very much. We would like to acknowledge some dignitaries in our midst as well. We have the CEO of Chartered Institute of Bankers. I think I saw you, Mr. Robert Jato. All right, yes, can you give us a wave? All right, thank you. We also have in our midst a member of the Monetary Policy Committee, Professor Joshua Abo, a Professor of Finance at the Department of Finance. Prof, we acknowledge your great work in leading to what we are witnessing today. We also have in our midst Honorable Dr. Gideon Boako, the MP for Tano. Not give us a wave. All right. Thank you very much. I also see a number of, I think Gideon is a former student of Prof. Alagidede, and I see Professor Jones Ode as well here from Wits, Professor Michael Graham from Stellenbosch. You are all welcome to this meeting. Thank you. I believe you are eager to hear more from Professor Alagidede, and to introduce our inaugural lecturer this afternoon is the head of Department of Finance, University of Ghana Business School, Professor Vera Fiado. Let's welcome her with. All right, thank you.
Good afternoon, everyone. Madam Chair, permit me to stand on existing protocols as I present to you the inaugural lecture. And he goes by the notion, the architect of metanomics and Africa's quantum reawakening. So Professor Yegandi Imhotep Paul Alagidede, popularly known as Yipa, is a visionary scholar whose work redefines economic through a multidimensional, Afrocentric, and cosmological lens, holding distinguished positions as the Bank of Ghana Chair of Finance and Economics at the University of Ghana, a Professor of Finance at the University of Witwatersrand, and Metanomic Architect at the Nile Valley Multiversity. Yipa stands at the forefront of Africa's intellectual and planetary transformation. Rooted in the sacred soil of Pungu, Telania, among the Kasina people, Yipa's intellect was forged through oral traditions, ecological attunement, and communal intelligence. From rural northern Ghana to earning a first-class honors at Kwame Nkrumah University of Science and Technology, and a PhD in economics from Loughborough University, his early contributions to macroeconomic stability and financial market analysis were widely cited. Yet, Yipa chose transcendence over tenure, birthing metanomics, an audacious paradigm that perceives money as both wave and particle, and economics as living systems encoded with ancestral resonance. His innovations, the Sankofa temporal framework, and math equilibrium reconfigure finance as cyclical, ethical, and cosmologically sovereign. Through ventures like Nognostic Agritech Limitless, Nabia Capital, and Meta Engineering, he fuses metaphysical infrastructure with regenerative technology, decentralized finance, and sacred geometry. His quantum currency model, now under review by the African Union, offers an epochal break from extractive finance, anchoring value in endogenous resources and metaphysical capital. Yipa is a pilot, cultivator, inventor, and mentor to over 45 doctoral scholars. From backyard permaculture to interstellar navigation, his life embodies a praxis of wholeness. At this planetary threshold, Yipa is not just theorizing the next economy. He's building it, flying it, and seeding it in Africa's soul. In metanomics, he gives us not an alternative economy, but the emergent civilization. Ladies and gentlemen, permit me to introduce to you Professor Yegandi Imhotep Paul Alagidede, your inaugural speaker.
Thank you very much. And since everyone stands on the protocols already observed, Madam Chairperson and Vice-Chancellor, permit me to also stand on the same protocols and add, Nananum, the ancestors past, present, and future, the on-world and off-world beings who have joined us in this lecture, and to all the family members who are here to celebrate this day, and to the keepers of our collective memory. When I thought about this lecture, there are several ideas that came to mind about how to convey it. And being a son of my grandmother, she taught me through stories. She simply says, tell the story of the paper you have written on the title. So today, I have a story to share with you on the journey from the cowrie shell to the crypto world. And that story is not just a story. It is a story of my personal evolution and journey. It is also your story, and it is our collective story that I tell. I'm just a messenger to convey this story throughout. So before proper time set in motion, poetry, and this poetry was set in the ancestral lands of Telenia. In ancient Telenia, where red earth met wind, money was memory, ritual, and rhythm. Among the Pumu, prosperity meant overflowing granaries, communal feasts, and market days steeped in generosity. Cowries carried inland by ocean tides, shone moonlight in the garments. Their value lay not in scarcity, but in sacred trust. Each shell a covenant of giving and receiving. Gold dust flowed like sunlight between hands, measured not by foreign digits, but in the consensus of this. Tikaputru ne nkonsonkonso, as the Akan goes. Gold was a golden thread, stitching villages into mutual abundance. Iron blades, gifted in marriage, sealed familiar bonds, not bought brides. This was an economy rooted in memory. It was decentralized, no foreign monopolized wealth. It emerged from the rhythms of fishes, farmers, and forgers. It was equally labor-backed in the sense that a cowrie's wealth reflected the perilous journeys across the deserts. A blade, the fire forged by a skillful blacksmith. It was also communal because elders redistributed grain in farming. Smiths shared scarce iron, and value was social before it was financial. Our modern Cedi, the Ghana Cedi, now 60 years old, echoing the sacred Cedi as Cowrie from the Akan, carries a ghost of this wisdom. But somewhere, the river was dammed. We forgot that wealth flows best when it honors land, labor, and love. And the elders warned. A river dammed grows stagnant. Wealth shared flows free. So long before the coming of the boat people across the Atlantic, the oracles had warned through the medium of wisdom that there would be people coming with a new doctrine. This doctrine will tell you that your ways are not the right ways, that your money not good, and that your religions and your gods must be forsaken for a different order. The fall of gold and the tyranny of fiat, and how the wealth of the river was poisoned is the next stage of the evolution of our monetary policy. In Tanzania, where the Pumu traded gold dust for calabashes, they knew a secret the world has forgotten, that real value is earned from the earth, shaped by callous hands and held in collective trust. But as the proverb warns, even the brightest moon wanes. Strangers arrived, their promises thin. They mocked cowries as trinkets, scorned gold as impure, and brought papers, lifeless with foreign faces the people could hardly recognize. This is wealth now, they echoed, with their guns in their hands. Right. Yeah. But these papers bent with the winds. Then 10 bought a goat at dawn, a whisper by dusk. The Pumu, lured by the false dreams, borrowed from the unseen coffers, chasing desires they never actually needed. The land still gave, but the people now forgot to listen, queuing for wealth they once harvested freely. The elders sighed. A shell without its story is dust. The river of wealth, once vibrant, pooled in the hands of distant keepers, damned and stagnant. At first, even the strangers honored the discipline of substance. The 19th century gold standard was a fragile pact, paper notes that could, in theory, become gold, but this covenant cracked under the weight of war and greed. In 1931, Britain let the pound float like a severed reed. In 1971, Nixon untethered the dollar from gold altogether, unleashing the tyranny of fiat. A system where central banks and sorcerers, not labor or land, create money with a keystroke. And so the river, once sacred and measured, was poisoned. Fiat, from the Latin, let it be done or let it be so, speaks not to reality, but to decree. No longer anchored in cowries, shimmer, or gold glints, money became untethered from meaning. Inflation ceased to be an anomaly. It became a structure. The US dollar, evidence shows, has lost about 87% of its value since 1971. Ghana Cedi about 99%. Global debt since the 1970s has ballooned from $1 trillion to $307 trillion today. Africa now spends more on interest payments than on hospitals and education. This, they said, was abundance. But abundance for who? For traders in New York? For rating agencies in London? For banks that lend and never plant? As for farmers, it is just calabashes and dust. And yet the river remembers. In Lagos, you've wrapped crypto wallets like gourds of millet beer to toe. In Kumasi, airtime becomes currency. They are not escaping money, they are just simply restoring it. The Pumu warned that wealth, when hoarded, turns to dust. So, the empirical proof of what we have, it's shown in table 1, and I believe that they will project the numbers for you to see, because we are now in the era of the empirical proof of the build-up from the Cowrie economy that was based on value, decentralized, and more communal based. So in table 1, we show the proof of stagnation and the inflation targeting framework. Ghana's headline inflation is not caused by monetary exuberance, as we can see from the table. The inflation targets for the various countries that we have selected for this presentation, and the actual inflation, and whether this target is met or not met. So over 60% of inflation, as the governor rightly pointed out in some instances, is largely driven by food price inflation. And this is mirrored in many African countries like Malawi, like Ethiopia, and almost about 50% of the inflation in many countries is driven as such. So Ghana's headline inflation breach is not caused by just monetary exuberance by the central bank, and we can excuse the central bank for that because the paralysis is largely that of a logistical constraint, a food that never reaches the market. Averagely, the Food and Agricultural Organization indicates that about 40% of food produced in Africa goes waste, largely due to post-harvest losses and the constraints in transport and other related agricultural bottlenecks. Nigeria's figures stem from imported inflation that is amplified by the collapse of the naira. In Egypt, inflation rides on ships across the Black Sea, laden with wheat priced in foreign volatility. In the two countries that inflation targeting has actually worked, in Kenya and in South Africa, their targets and success owes much to rainfall and resource exports rather than central bank foresight. So the inflation, generally speaking, across all African countries that we have studied for this particular presentation is mostly structural, geopolitical, and environmental. Yet, policy tend to remain mostly monetary. The second table looks at the lending rates and the gridlock and the starvation that small and medium-scale enterprises tend to face trying to access funding for development. In Table 3, we reveal the tragic logic of monetary orthodoxy. Tighten rates to fight inflation, then observe that as credit dries up for the very sectors that could produce the goods to tame the inflation. So we produce a kind of situation where you have your one foot on the accelerator and another foot on the brakes. And this is one of the classic examples of what the regimes that we have operated so far. In Ghana, the banks are cushioned by risk-free government securities and yet avoid lending to actual farmers. Nigeria's small and medium-scale enterprises are structurally locked out, receiving only 15% of loans while debt servicing continue to rise. In Zambia, credit to GDP remains abysmally low. What emerges is a vicious cycle where policy prioritizes market signals over actual economic needs. Thus, Africa's inflation targeting regimes become a parody of sovereignty. External models are applied without contextual nuance. Monetary tightening responds to symptoms, not causes. Meanwhile, productive sectors, language, and youth migrate, and the continent continues to import inflation and export resources. From the story of the great ancestors, it is time to restore value to what truly builds wealth: food, energy, and minerals, and to liberate the finance from the tyranny of orthodoxy. As the elders warned, when the goat is loaned to the leopard, only bones remain. So the ancestors, through the vision of the Abrewa, for when you do not know and you forget the lessons, they say, ask Abrewa, the older lady, the bastion of wisdom and intelligence, responds to all our questions when we duly go to her and ask, where is the right way to go? So Kadwa's vision is the seed that remembers what money actually forgot. Legend holds that when Kadwa, the sacred grandmother, descended from Mount Kenena after 9 moons of fasting and vision, she brought not gold or grain, but a carved baobab seed. It contained a system edged in patterns of truth, one where money is born from the land and credit flows like water to those who grow, build, and nourish. In a world of the fiat illusions and imported economic doctrines, Kadwa's wisdom offers a way home, a philosophy that ties money back to what we can touch: gold, cocoa, labor, kilowatts, and land. Kadwa's seed is not just a myth, but a metaphor for a new monetary and financial system, what we call the metanomic model, a resource-based monetary system, which is also an endogenous resource-backed currency. A monetary system grown from the ground up, not conjured from interest spreadsheets in Washington. In Figure 1, we want to show how this model actually works. And there is a practical demonstration of this in reality by Appiah Capital, where we have the sovereign monetary ecosystem of resource-based sovereignty. The supply of money grows here from a resource base, whether it's gold, oil, or cocoa. And the resource valuation, that rations the amount of money that is used to back the currency. So in this model, the monetary base, which is defined as MO, is actually backed by some reserves that is held in actual resources, such as gold, oil, or the dominant paradigm within the economy. Therefore, we define a dynamic adjustment factor where the monetary base can be tweaked and changed according to changes in the resources that come into the model. Through this model, we can obtain most of the things that we are now fighting and trying to attain: macroeconomic stability, less currency fluctuations, and more output growth with stability and consistency. It is also the policy that ties in the fiscal and monetary rules that we have deployed so far. So with the resource-based monetary policy, supply of money grows only with real productive value. Unlike traditional fiat systems, this model anchors liquidity in measurable fiscal realities: gold mined ethically, cocoa harvested by real hands, solar credits produced by Africa's radiant sun. The endogenous resource-backed currency operates flexibly, adjusting to productive capacity while protecting against speculative shocks. In essence, it converts Africa's resources into financial instruments without passing through foreign capital bottlenecks. To demonstrate this, we simulate a few examples, and we discuss just one practical one that we call the Appiah Capital. In Figure 2, which you'll see next, Appiah Capital is an actual decentralized finance scheme. It's a company that operates elsewhere, but we're trying to bring it here. But over the past 5 years, we've been simulating and learning about the Ghanaian environment and to see how you can deploy a decentralized autonomous organization like this. And Appiah Capital, in this case, is just a small company, but it could be a bank, it could be a credit union, or at the national level, a central bank. And globally, it could be an international financial institution. If you have this, the resource-based monetary system and the endogenous resource-backed currency work through converting any resource that you have on a blockchain technology into a coin, if you like. So over the past 15 years, the cryptocurrencies have grown in size and in volatility too. At the last check, the crypto market alone is around $4 trillion. There are projections that growing at the rate of 15% per annum in the next decade or so, it will actually become much larger than most central bank reserves. This becomes a very important area to look at. So when we define an actual resource-based system, we convert that through technology on the blockchain into an actual financial asset. In this case, if we are looking at agriculture, farmers can get an agri-coin that can be tied to different farmer cooperatives or individual farmers. And through that, yields are based on the tokens that are given in that. So the seed to life through the Ghanaian experiment, Appiah Capital, is piloted around the Bono region and the northern savannah. So we define a currency known as NAC, which is a rollout of the model we talk about embedded within local cooperative ecosystems. We have Equiafo in Ketua and a technology that is run by Gnostic Agritech's blockchain infrastructure. So at this system, farmers no longer need to go to the banks to access credit with collateral and sometimes at rates that are quite beyond their ability to afford. And this is how it works sequentially. In step one, the farmer is registered under the Equiafo in Ketua harvest. He harvests about 500 kilograms of cocoa. This is verified and tokenized on the Gnostic Agritech blockchain system. A smart contract that issues cocoa tokens equivalent to the farmer's yield is given. In step two, these tokens are redeemable for NAC, that's the Namibia capital currency, and at a fixed resource convertible rate. The farmer chooses to take maybe a 6% loan compared to, say, 35% from a normal commercial bank. This is denominated in NAC to purchase tools for the agricultural expansion. It could be put new irrigation in place due to rainfall variability and to hire more labor to increase yield. In step three, repayment is tied to the future harvest outcomes of the farmer. The more yield the farmer obtains, the lower the repayment burden. If crops fail, the farmer will get automatic refinancing. And most times, this would be 100%. If the crops fail, the farmer can also be given a kind of insurance that covers the entire failure and to enable the farmer to go back into production. The local cooperative Meta Farm, backed by Gnostic Agritech's predictive climate and soil analytics, aggregates the data and anchors liquidity flow for the next farming cycle through reserves of the Grace Combs Institute of Technology. Madam Chair and our invited guests and distinguished governor, we have resourced for this very experiment. We have seen inflation volatility drop by as much as 30% as local prices now respond more to supply and productivity than to imported shocks. Small and medium-scale enterprise credit expand over 200% with youth-led agritechs, solar installers, and cocoa cooperatives receiving sustainable financing through algorithmic lending cycles. To sustain this innovation, institutional transformation is a must. We propose 3 bold steps. First is to amend the Bank of Ghana Act to introduce developmental mandates that enable central bank to support strategic sectors via resource-backed frameworks. The second is that we need to launch the digital Cedi, which I believe the governor has already started, but we are talking about much more bolder and deeper backing through the reserves and the resources that we have. In our model, in the paper that we produced for discussion, we are actually looking at a backing of a minimum of around 30% of gold or cocoa combined. And I believe with this type of simulation that we have done, if our central bank could approach it with the boldness that the governor assured us, we will say goodbye to volatility of exchange rates, whether they are appreciating or depreciating. So Africa's first fully resource-backed central bank digital currency, beginning with gold and cocoa and expanding to include solar, share nut, our manganese, diamonds, and other verified land values could be a starting point. We need to also establish institutions that will practicalize these ideals with the University of Ghana as a global beacon for quantum monetary design, where meta-economists code with farmers and central banks learn from cooperatives. Namibia Capital is more than a project. It is a paradigm shift. It reminds us that when value is born of the people, governed by logic rooted in land, and backed by tools that speak our Kasam, Kiswahili, Ewe, Zulu, sovereignty is not a dream. It is a design choice. The forgotten wealth of Africa has often been touted as a resource-scarce place. And the scandal of resource riches in a paper world is also very much in our current purview. Africa currently stands at a crossroads of paradox. the richest continent in natural resources, yet changed to borrowed money and speculative financial systems. While nations like Switzerland and Saudi Arabia peg their currencies to gold and oil, Africa's Cedi, Naira, franc, and birr are yoked to formulas crafted in Washington, London, and Brussels. And this great paradox is shown by the abundant resources that are displayed here in Table 3. In Table 3, you find Ghana's the resource endowment throughout the continent. We just produced just a few indicators here. Apart from the natural resource endowment, Africa still has the most vibrant and virile population today. So we are still at the very early stages of what demographers call the demographic dividend. And the continent, with its youthful population and abundant resources, stand at a very transformative time to launch new systems that could bring about transformation in the various economies. So in Table 3, Ghana earns about $10 billion annually from gold and cocoa alone, yet its currency follows mostly prescriptions from outside. The Democratic Republic of Congo controls 70% of global cobalt, valued at $20 billion. But it uses a franc that is pegged to the European Central Bank logic. Nigeria earns $40 billion from oil, but its Naira dances to Wall Street tunes. This is not misfortune, it is misdesign, an economic betrayal hiding in plain sight. This contradiction defines the modern economic tragedy of Africa. Exporting gold, cobalt, cocoa, and oil, only to import debt, dependency, and despair. But all is not lost, and that is essentially why the creation of the Bank of Ghana Chair in Finance and Economics provides another angle to rethink and look at economics in a different way. Metanomics, the meeting of ancestral wisdom with quantum leaps. Emerging from this broken system is a fusion of ancestral economic systems and quantum age tools. Here, Akan gold weights meet blockchain. Ubuntu becomes the philosophy of decentralized finance. Currencies like our endogenous resource-based currencies are pegged to real productive assets like gold, cocoa, and solar energy. They adapt through smart contracts, forecasting inflation based not on speculation, but on rain, harvest, and production. In this new era, money becomes narrative. Kafui weaves QR-coded kente. Awetori lights up villages with pledged gold. Kuwek tokenizes millet yields on agroecological networks. Alagidede will code a currency from rainfall data. Danra trades verified yams for non-fungible tokens of woven art. In Arusha, metanomic scholars debate Kadwa's laws, which says that all currencies must mimic rivers, evaporate, condense, nourish. Stagnation is death. The seed is in the soil. Nairobi's matatus run on kilowatt tokens. Lagos oil is backed by mangrove restoration. Johannesburg art trades in redeemable creative intellectual properties. The call to action follows what my previous speakers have already indicated. We want this chair to be a transformative place for the new engagement in real-time research, intellectual discourse, contextual synthesis, and philosophical understanding of the imperatives that inform our economies. Madam Vice-Chancellor, Professor Nana Aba Appiah Amfo, we hope that this chair that we launched today, want to use it as the vehicle for the Institute of Metanomic Futures, a world-class sanctuary of knowledge, where computer scientists study AFA and IFA divination algorithms. Economists decode the oral code trade law, and lawyers draft smart contracts in Ghana, Nankani, Sesotho, and Ewe. Launch the Cedi Research Unit here at the Cedi Research Center to fuse the knowledge between what the central bank does and what we teach in the classrooms and research in our various research units. The University of Ghana at this stage becomes our intellectual citadel, where innovation is forged, not in imitation, but in original science rooted in metanomics. Accra must become the capital of quantum finance. Let the world come to teach, not to teach, but to learn from what we know and we have studied. To you, Governor Dr. Johnson, Pandit, Asiama, your words of encouragement for this chair are well noted. We want now to move to the next step so that the Bank of Ghana will rise as the Kemet of monetary innovation on the continent. Let us issue the world's first resource-backed, quantum-secured central bank digital currency. Roll this out, the gold-backed digital Cedi in 2026. By 2027, let's circulate algorithmic cocoa share nut manganese tokens. By 2028, anchor a pan-African endogenous resource-backed currency clearinghouse that will make the Bretton Woods twins obsolete. Let foreigners come in droves to study the Ghanaian central bank model. We are the richest, as we've seen, with the resources in our hands, both human and natural. We are the original thinkers of this planet. Nobody understands this continent better than us. We are the apex predators. Let us roar. To our lawmakers and bankers, pass the laws that mandate that a minimum of 30% of our resources should back our currency. This is the time for both sides of the political divide to get together and study the colonial laws that continue to force us to siphon our own resources to finance external projects outside of our borders and rather concentrate those resources here. So construct the district reserve vaults from Bolgatanga to Kumasi under blockchain surveillance. Launch grow your currency bonds that allow citizens to invest in themselves, and land-backed, labor-linked, and legacy-powered systems. No more begging, no more borrowing. Let sovereignty be echoed in our own financial DNA. Now to the final benediction. From Cowries to cryptos. It has been a memory, a covenant, and a power. Our Cowries, one whispered sacred trust across lagoons and forest markets. Our gold dust shimmered in the hands of griots and queens. Our iron blades sealed marriages, not mortgages. Then came the age of forgetting, of fiat illusions and borrowed logics. It now, and so it is. It now, and so it is. Thank you.
Thank you very much, Prof. Can we please add another one to it? Let's do it. Thank you very much, Professor Alagidede. In your remarks, you said you are evolving, and that is true. When we first met somewhere 12 years ago, he had just two names, Paul Alagidede. When I was finishing my PhD around 2019, I sent him a message, and his reply, with his signature, he had added Imo. 2 weeks ago, we met, and I saw he added Yegandi. So I'm sure by the time you finish this chair, your term is done. We will assemble here again, and I'm sure we will have another name added to his name. We thank you very much for such a great speech, and we will now call on our discussant. But before we do that, our special guest of honor, Professor Dr. Asiama, will at some point leave, so we will take a group picture with him, Vice-Chancellor Pro, VC, the deans, our registrar will take a picture here. After that, the directors of the bank, the board of directors, the advisors will also join, after which we will take our discussant. Thank you very much. With all humility, we will call on Dr. Asiama and the principal officers just here. All right, thank you. Thank you very much. So please come over here for us. All right. All right. Prof. Thank you very much. All right, we continue. All right, thank you very much. We request we humbly take our seats. The program is still in session. All right, thank you very much. We will continue with our program, and at this point, we will take the remarks of our discussants, Dr. Philip Abradu Otu. He is the Director of Research at the Bank of Ghana and a member of the bank's Monetary Policy Committee. He has spent 29 years working with the bank and rising through the ranks. 6 out of the 29 years was with the International Monetary Fund, where he worked as an economist and advisor on Ghana-specific issues and other issues related to peer economies in Africa and other emerging markets. He is an economist with track record in several areas. In 2012, he joined the IMF as an economist and advisor to an IMF executive director. At the IMF, he had responsibility of country macroeconomic analysis and assessment of country risks, in addition to working and assessing risks on a number of African countries. Prior to his secondment to the IMF, Dr. Philip Abradu Otu was the head of Special Studies Units at the Central Bank. He holds a PhD from SMC University in Switzerland and is a product of the University of Warwick in the UK and the University of Ghana, Legon. Shall we welcome Dr. Philip Abradu Otu with a clap? Thank you very much.
So like my predecessors, I'll stand on the existing protocols. Let me also say that it always feels good to be back to the University of Ghana. It's a bit sentimental, but Bank of Ghana has a natural sentimental attachment to this auditorium, and it's been amplified in the earlier speeches. The governor did say that. This is my second time here in this auditorium in a similar capacity. The first was 2 years ago, and I was here at the Misata Inaugural Memorial Lectures, where I played a similar role. And I think this was just at the cusp of the beginning of the current IMF program that we are implementing. And I think the topic at the time was on debt and what we needed to do to contain debt and to allow the economy stabilize. It was a very thought-provoking lecture series that we had. But let me first thank Professor, I think the name is Alagidede. Did I get it right? You know, when I got here this afternoon, I spent 10 minutes and I was schooled on how to pronounce the name well. I was told it's Alagidede. So, Prof, thank you. This is very thought-provoking. It's a wonderful paper with many radical ideas, and we appreciate this paper so much. I think the paper has done an excellent job, and this could not have come at a time more opportune and more appropriate. It is also coming at a time when the Bank of Ghana is at a threshold of celebrating the Cedi at 60. And it is also coming at a time where we see some stability in the currency, and in your words, a little bit of metanomics has started creeping into what we do at the bank already. Because this stability is stability that is backed by leveraging on our resources. And when I say that, I'm only referring to our Gold for Reserve program at the Bank of Ghana. We are leveraging on those resources to provide stability to the currency. So the metanomics has already started. And this paper could not have come at an opportune time. Now, for those of you who listen to the Prof, you know, these professors, when they are talking, you must listen to them very carefully. Because he's done many things, many things in his speech that if you don't take care, you might get a little bit confused. He started by saying that he will do it in the form of a story. Then he talks about trade, he talks about gold dust, he talks about gold standard, he's talking about rivers flowing somewhere, he's talking about fiat regimes, he's talking about inflation, he's even talking about the behavior of the United States dollar, including global debt and Africa's debt. When you think about all these things, it's economics. He's talking economics, but he's putting it in a different story. And let me try to break down what the professor has just done in very simple language. What the professor has done is that the professor has tried to trace the evolution of monetary policy. He's traced the evolution of monetary policy from cowries that were being traded, in which the people had confidence, all the way through to cryptocurrencies. And he's saying that cryptocurrencies is the new regime that is coming, and he's urging us to do, he's telling us that beyond cryptocurrencies, we will be moving into metanomics. Within that spectrum, from the cowries to the cryptocurrencies, we have had so many monetary policy regimes. We've had a direct regime, we've had a liberalized regime, we've had a monetary aggregate targeting regime, we've had an inflation targeting light regime, we've had a fully fledged inflation targeting regime, and now we are at the cusp of transitioning to something else. We don't know. but we are moving, the train is moving. In your words, you said the river is flowing. So this is where we are. And on this spectrum, what the professor has done is that he has looked at the in-betweens between the direct monetary aggregate, the direct regime of monetary policy, through to the indirect, through to monetary aggregate targeting, through to inflation targeting, and he's criticizing those regimes, and he's saying that move to economics. This is how I understand what the professor has just done. And I think it's a brilliant thing that he has done. So we really appreciate this paper very much, because it is at the heart of the debate, even in the central bank. And we are asking ourselves, just last week before the Monetary Policy Committee meeting, we were debating the relevance of money in the economy. And does money really matter? What you've done is also talk about the role of money in the economy, and should we take it seriously? And so in setting the stage for the discussion, I'll do three things. I'll summarize what the professor has done and what we have heard in this room. I'll discuss some areas for further improvements of the paper. And then finally, I'll put everything in a policy environment and then conclude. First is the summary of the paper. As I did indicate, this is a very good paper. The paper has provided a critique to Africa's monetary history, from colonial systems through transitioning to the use of cowries and gold dust, all the way to fiat currencies and so on and so forth. The paper also highlights the failures of inflation targeting, which I just mentioned a while ago, which prioritizes the role of external creditors over local development. And the paper is saying, let us shift. Let us shift radically to a resource-based monetary sovereignty, which is anchored on an endogenous resource-backed currency framework. And then again, he's saying, let us integrate all these issues about blockchains and indigenous wisdom to create a decentralized resource-anchored monetary system. Of course, he also traces the historical context. He talks about the pre-colonial Africa, and that we had our own sophisticated ways of doing things, which were resource-backed monetary system, and that it was a very good thing that we had at the time. I've touched on this already. He criticized the modern monetary policy framework. He's saying that inflation targeting has failed in Africa due to supply-side constraint. He showed a very beautiful table 1, which shows some countries in there and how these countries have performed over the years. And he has come with the solutions. He has results. And then he also did some simulations to show how the new framework he's proposing outperforms fiat systems in providing stability and growth, especially during times of shocks. He goes ahead to give his recommendations. And in the recommendations, he's saying that amend the Bank of Ghana mandate to include developmental goals, retain domestic resource reserves, and leverage. Along the line in the paper, he talks about leveraging the African continental free trade area for regional resource pooling and ERBC convertibility. Now, my comments. I like the fact that the paper is challenging the status quo. I think this is what we all need. We need to challenge the status quo. We need to brainstorm, and then we need to come out with final solutions. The paper is just doing that, and this is revolutionary. My overall assessment is that this is visionary and provocative paper that challenges entrenched monetary paradigms and offers a distinctly African alternative rooted in historical wisdom and modern innovation. It is well researched, theoretically sound, and policy relevant. However, I think that it would have benefited from a more balanced critique of existing systems, deeper engagement with implementation challenges, and clearer technical expositions. Let me then touch on the solution of introducing the resource-based monetary sovereignty. And here, I think it's a bold and original contribution. What I see the arrangement doing is that the arrangement is blending post-Keynesian and modern monetary theory with African resource realities and blockchain technology, offering fresh alternatives to inflation targeting orthodoxy. The new paradigm he's proposing rests on 5 interrelated propositions. First, value must be endogenous, he says. It must be derived from natural resources rather than external currency reserves, which I agree, or global capital sentiment. Second, central banks must serve as a developmental goal. Here, this could be very contentious because then the issue here is people will begin to argue and say, what is the role of fiscal policy in development? The common convention is that monetary policy stabilizes prices and fiscal policy should act to drive development in the domestic economy. The use also of comparative simulations between the fiat orthodoxy and the RBMC-ERBC adds analytical rigor to the work that has just been presented to us. The paper is providing actionable recommendations for central banks, governments. He talks about the setting up of institutions, which I agree very much because I also believe very much in institutions. And I think that in all what we do, we need solid, sound institutions to support whatever policy solutions that we bring on board. And so on this point, which I've just said, we must also bear in mind that the 2 main policy-making institutions are the central bank and the fiscal authority. And Prof. Alagidede, in his point number 9, makes a call to action. He's calling us to action. And this call to action, I think, what we need to do in the paper to finalize the paper is also to point to the fiscal authorities, the kind of fiscal reforms and the kind of structural reforms that we need to help propel these policies into action. Because without these reforms, without these structural policies based on sound principles, it will be very difficult to achieve some of these things. And on top of that, which he also said, that we need legal reforms to support some of these ideas. So that must also be borne in mind. Now, while the critique of inflation targeting and structural adjustments are valid, the paper sometimes, the way I saw the paper, it paints all orthodox policies with a broad brush. Some African countries, in one of the tables, we see Rwanda, South Africa. I think there was a third one which says they have managed their inflation and growth very well. They've kept them within target. But I think it would have been nice to extend also that aspect a little bit more to see what exactly these countries are doing in their countries, what institutions have they put in place, what legal reforms have they pursued to ensure that all these good things are happening in that country. And we really need to take a closer look at the kind of successes that these countries have chalked. I think on this, let me just make a quick footnote. In table 1, I think Prof. Alagidede showed a list of countries which he tagged as inflation targeting countries. But if you look at the annals of the IMF and the World Bank, I think in Africa, they classify only 2 countries as being inflation targeted. So these countries are Ghana and South Africa. The reason being that the way the IMF and these institutions look at it is that if you say you are migrating or moving towards an inflation targeting regime, you need to publicly make an announcement that you are changing your monetary policy framework from A to B. These countries have not done that. I see Kenya, I see Egypt, I saw Kenya, I saw Egypt, I saw Ethiopia. But these countries have not publicly come out to tell the whole world that they are moving towards an inflation targeting regime, because once you do that, the international committee then comes in, they try to assess the readiness of your institution, the readiness of your operational framework, the readiness of your transparency and accountability frameworks, to see how you can cope with such a regime. So most of these countries have not done that, but what they are doing mimics an inflation targeting regime. One country, the United States, even it's not an inflation targeting country, because they have publicly not come out to tell the whole world that this is what they are doing. But for those who have studied the United States, they realize that they have all the institutions that support an inflation targeting framework, but they have a dual mandate. And in the case of the US, they say their framework is eclectic. Eclectic in the sense that they can switch between objectives depending on what the economy is telling them at any time. That is another form of monetary policy framework. So I think in the final analysis, we might probably want to have two tables to show those that are purely inflation targeters on the central bank. There are some areas for improvement which I think that the paper will also have to touch on. Political instability and governance challenges on the African continent will have to be touched on in the paper. The resource price volatility. There are volatilities in the commodities that the Prof is telling us that we need to shift towards to anchor stability in the system. The sad thing is that the prices of these commodities are determined elsewhere. I think in the grand scheme of things, what we need to be thinking about is how to develop systems that will allow us to determine the price of those commodities that we export. Technological and institutional capacity gaps are also there. We need to talk about them. And then the risk of elite capture or corruption in resource monetization. So an expanded literature on these risks will strengthen the proposals that are being forward and make it more solid for adoption. On cryptocurrency adoption, my personal view is that the paper could also benefit from referencing similar experiments or models globally. If you read the paper, it talks about Venezuela, the Venezuela's petro. I think it's somewhere in the paper. We have El Salvador's Bitcoin adoption. These countries have done very well. Or commodity-backed currencies in Latin America. So we need what these countries have done because we need to contextualize the feasibility and the potential pitfalls down the road when we begin to move towards that direction. Let me put all of this in a political context. Just as the Prof concluded in his sermon, in his last statement, he was talking about a sermon and he was talking about a benediction. And this is how he concluded. Let's value wild run again. Let our currencies honor sweat. I like that. Soil and sun. Let physicists entangle ledgers to gold. He's talking about distributed ledgers and all these things. Let farmers tokenize millet yields. Let our daughters dream of looms and ledgers, not loans. The river does not dry, it becomes the storm. This is his final benediction. Well, I think the storm has begun. As I said earlier on, our currency is beginning to honor sweat. We are now extracting all that is below us, and we are using it to back the currency. And if you look at how much has been added to our reserves coming from gold, this has been very substantial lately. And I think this is good news. So a process has begun, but we need you to help us. We need you to help us to stretch that process out a little bit more so that we can all enjoy the benefits. So we are beginning to leverage our resources to anchor stability. And the message for you, Prof. Alagidede, is we need your help. But it will also surprise you to know that in the past 2 years or so, we've had 5 central banks. 5 central banks have approached the Bank of Ghana to say, look, we hear a lot, we think you guys are doing well, and we want to come and learn from you how you are able to leverage your resources to shore up reserves. The Namibians have been here, the Botswanans have been here, and the Gambians are also coming. They've come actually and gone lately, and they are all saying that show us the way. So I'm sure they want to swim in that river that you're talking about. We just need to get our act together and ensure that the emerging storm becomes a good storm for all of us. And then policy shifts, proposals. If I understood the import of the paper well, what the paper is advocating is that we should replace our existing policy frameworks with resource-based framework solutions. What this means for us is that we need to abandon our inflation targeting framework of monetary policies and monetary aggregate targeting framework on the continents for the resource-backed currency arrangements. Well, I think when you talk to a typical staff from the central bank, they might want to push back on some of these things because I always say that the inflation targeting framework, the name is a little bit misplaced. It's a little bit misplaced because the misconception is that all what a central bank is looking at is inflation. But we don't look at inflation alone. We look at a whole host of things, including how the economy is humming, how the economy is breathing, the pulse that we are getting from businesses, the pulse that we are getting from consumers. Maybe it's about time we began integrating metanomics into the whole framework for taking decisions regarding how monetary policy should behave to help drive growth. Somewhere in your speech, you talked about banks and the role of banks. I think this is where we play a role. We need to listen to all these heartbeats coming from people like you and see how we can bring it on the table and begin to pursue policies that will drive interest rates down, allow the private sector to tap into resources and then get into metanomics to help drive growth in the economy. I think this is where we are. And as I did indicate, your paper has tackled our minds on all of these issues. We thank you for that. And then again, finally, I want to touch on economic models and paradigms. Economic models and paradigms are not to provide us with instant solutions. They rather help us to think about issues and proffer solutions. And in this regard, we should be thinking of how to explore arriving at what I call blended solutions. Let us not take these paradigms and economic models as they are, but we need to blend them with our own thinking. And this is exactly what you're saying in your paper. Or maybe we need to go back to the Cowrie era and see how we can bring some of the good things in the Cowrie era into today's term, blend with what we have to arrive at solutions. I think my time is up. My take on all of this is that let us run wild, but let us run wild with blended solutions at the back of our minds. So with this, I'll bring my submission to an end, and thank you very much.
Thank you very much. So I'm going to invite Dr. Abredu Otu and also Professor Alagidede to join me up on stage so that we can have a very brief period of Q&A. So you may please have a seat. Yes. So thank you again, Dr. Abredu Otu, for such clear, concise, and engaging discussions of Professor Alagidede's paper and presentation. So at this point, I'd like to open up the floor for a brief session of questions and answers. So if you have any contribution to make, questions to ask, can you kindly raise your hand? I have a mic to my left, and there will be a mobile mic going around as well, so that we can take your contributions. Please do remember to introduce yourself and then keep your questions concise so that we don't keep you here much longer than we want to. Do we have any questions on the floor? Yes, I see one hand to my left. So there's a mic going around. So can we have the mic brought to the gentleman to my left? Any other questions? Do I see any other hands? Okay, I see a gentleman right in front of me. So let's have these two questions. Who has the mic, please? Okay.
Hello. Good afternoon, ladies and gentlemen. I'm Dr. Ohene Asante. I'm a public policy analyst. And my contribution or comment has got to do with the issue of policy shift and political will. And with respect to times and seasons, we all know the presidency of this current administration is resetting the economy, and it means that they are restructuring of things. I've seen the Honorable Dr. Gideon Boako, Deputy Ranking Member of the Finance Committee of Parliament. There are issues of legislative provisions that we would need to put in place to restructure most of these things before we might even have to come to the monetary policies and fiscal policy. My question is, how do we ensure political continuity in terms of policy administration, that this government will do the resetting and the next administration also come and continue what we have to do? I remember last year, the National Development Planning Commission did what they call the Ghana Vision 2057, and most of the things discussed here are things that was fleshed out during the policy formulation stage. Thank you so much.
Thank you very much for this question. We'll take another one quickly. The student at the back, please keep your hand raised so that he can see you. Over there. No, the gentleman, please come. Yes, he's over there. So remember to introduce yourself. Remember to keep your questions concise as much as possible.
Good day, everyone. My name is Justice Joe Appiah Jr., and I have two questions, one under cryptocurrency, one under monetary policy. So under the cryptocurrency, I want to ask, in what ways do you envision cryptocurrencies transforming the local economy and creating new job opportunities in the coming years? And also under the monetary policy, I want to ask, how effective is the monetary policy transmission in African economies, and what are the key channels through which policy decisions affect the real economy?
Thank you very much for your question. Now, a final question from our Bank of Ghana colleague here to my left. So we've had one from hopefully all sides of the room. Please keep your hand raised if you don't mind, so that he can find you easily. And then afterwards, we'll give our speakers a chance to respond.
Thank you very much. My name is Robert Jato, CEO of Chartered Institute of Bankers, Ghana. Prof, thank you for stretching our imagination in terms of what is possible in your metanomics theory and, of course, practice as well. In banking, risk management, or any financial system, risk management is crucially important. You did mention in your presentation that there are some Bretton Woods institutions that do not necessarily support what we do, given the direction of travel. But my key question is whether you have factored in who controls the crypto space and the digital space and the blockchain technology. Is it possible that our success in your metanomics theory could pose a threat to someone, and therefore that person can begin to change the technology on which you propose your metanomics theory? And how do we manage that risk? Because that could be a threat to someone's interest. Thanks.
Right. Thank you very much for those very deep questions. With the question of monetary policy transmission, I think the Director of Research is the best person to tell you all the transmission mechanisms practically. Starting with the last one on risk management and the crypto platforms, what you need to know is that although the bulk of the platforms in which cryptocurrencies are currently traded or evolved are outside of our control, but it is also true that there are a lot of Ghanaians that are playing in this same market, building the platforms and the networks. So one of the examples about we actually evolved this independently. You don't need to go through the regular channels, but if that's where you want to go, and that's okay. But the model I'm proposing in metanomics is really our self-driven, organically created platforms for the distributed ledger. The knowledge that we're talking about is not unique to any particular group or any particular country. When a new technology comes, it's simultaneously available to all at once throughout the planet. If you are ready for it, and I must say that if about more than half of us as Ghanaians are dreaming and wanting this to happen, we will find a means to create the platforms and bring the solutions home. So the risk management side for the metanomic model is really able to design our own systems, and that will work. It's also about how can cryptocurrencies transform the new economy. With the tokenized assets that we are talking about at the moment, if we can drill these down to real resources in my endogenous resource-backed currency model, we can create unique assets for various kinds of financing. So for instance, if we want to finance a lecture theater or a laboratory at the University of Ghana, we have lots of resources here that can easily be tokenized. Land that belongs to the university, intellectual property that the university has, can all be pooled together and tokenized. And these non-fungible tokens, as I refer them, can then be used directly and converted into the units that we want to finance. So contractors that have this knowledge can also get paid and supply their services, and amongst others. We show the example of agriculture, for instance, but if you want to build also roads, a 6-lane or 8-lane highway connecting Kumasi to Accra or Ho to Navrongo, the same technology can be used to deploy that. So with the endogenous resource-backed currency, you realize that Ghanaians already have it all. We are the 6th largest producer of gold in the world and #1 in Africa. In fact, about 130 tons of gold are produced in this country every year. And so the issue with the legislative provision that our first speaker talked about is very key. If we want to take control of these resources, we must do something about the laws that were written by us as our ancestors in the past that has allowed most of our resources to be siphoned out. Currently, if you want to change them, you have to go through the same process for which the laws that made possible for the siphoning to take place. The UN ECA indicates that roughly about $80 billion leave Africa annually through what they call illicit financial flows. If you add that to all the issues surrounding commodity price fixing and the siphoning through dividends and interest, Africa really is a net exporter of wealth to the rest of the world. So we have everything to do what we want to do here in terms of development. And our parliamentarians should come together on both sides, study the laws, the economic laws that were signed regarding commodity exploitation. And so on both sides, whether you're in the opposition or in the ruling government, it is important that we come together to expunge those laws. With those laws expunged, we just start to use our cocoa, our gold, and our manganese to back our currency. And we can go beyond the minimum that we have simulated. 30% is just the start. But if you have over 50% of backing of the currency, we will say goodbye to inflation, goodbye to volatility of currencies, and that's where real development goes. So I agree with the discussant earlier on the developmental role of the central bank. That if we can do this, we can begin to talk about real development, where the central bank becomes an agent for advancing economic development over and above the monetary functions and price stability. Thank you.
So I think what the Prof has said, he has brilliantly touched on the issue of cryptocurrencies. He started out by saying that the infrastructure for cryptocurrencies, we don't have that infrastructure now. At the same time, he seemed to be saying that people can get away around cryptocurrencies and then tap into the wealth that they get from cryptocurrencies into the economy. If you listen to the governor when the governor was giving his keynote address, the governor talked about a virtual asset providers law. We call this a VASP law. What the central bank is doing is that the central bank is trying to develop a law around all cryptos. The professor is talking about tokenization, and I think this is the time where we need to carefully bring in some of these issues of tokenization into the VASP law and what it means for wealth generation. He's also appealing to the parliamentarians because it is going to come to a time where the parliamentarians will have to scrutinize these laws when they are prepared. It will be brought to the floor of Parliament for debate, and they must look at these things in a more critical way and provide us with what we need. That being said, I want to touch on the issue of the monetary policy transmission. I think Justice Joe Appiah's question was how effective is monetary policy transmission and how it affects the real economy. Now, this is how I tend to look at monetary policy transmission, that the stages are basically, in simple terms, the monetary policy transmission stages are two. The first move from the central bank to the commercial banks, and then there's also another leg of the transmission from the commercial banks to the real economy. And so when the central bank changes its framework, its liquidity framework, its monetary policy stance, it should immediately transmit to commercial banks. And then commercial banks are also then required to transmit this to the rest of the economy. The issue here is that I think the interest rates are very high, and therefore when the central bank adjusts its rates and the commercial banks follow suit, if you check the data, you would realize that the change at the commercial bank level is instantaneous. The change to the rest of the economy has a long lag. It has a long lag because if you have high interest rates, the demand for credit will drag. Let me put it that way. So the demand for credit drags in the midst of supply of credit. And when the demand for credit drags because interest rates are high, we don't tend to see the transmission felt in the economy at large. And I think this is where the problem is. Bottom line, we need to get inflation down. We need to get interest rates very low to below 10%. And at that point, people can begin to borrow, invest, pay 9-10% in interest, and you can have 90% of your profit resources to you for other developmental purposes. Thank you.
Thank you very much. Yes, I do admit I did see quite a number of other hands up, which lets me know that this was a very engaging session. But unfortunately, I will have to close the session just so that we don't keep you here much longer than we promised. But I do want to thank you for your, even if only brief, insightful questions and contributions. And a very special thanks to our speakers, Professor Alagidede, and then also Professor Appiah. So you may kindly take your seats again while I close the session. Shall we give them a round of applause? Now, to help me bring this meeting to a close, I will now invite the chairperson, Professor Nanaba Appiah Amfo, the Vice-Chancellor of the University of Ghana, to kindly deliver the closing remarks. Shall we welcome her with a round of applause?
Thank you, Madam MC, distinguished guests. I hope we still have some remaining in the hall. Colleagues, students, and friends. I would say that what an afternoon it has been. We have been treated to a very stirring session. We have listened to our distinguished lecturer. When he was being introduced, he sounded almost like a physicist. And then when he spoke, I wasn't sure whether he was a poet, an economist, a classicist, or a priest. But the good thing is that all of these are not mutually exclusive, and so you can have all of that in one person, even though it is rare. We had the privilege of our discussant coming up, basically telling us that, yeah, you've heard from the professor of economics. I'm here to break it down for you. Now, guess what? If I thought our professor was a poet, Dr. Abradotu is a spoken word artist. Here is the professor of economics. He comes close to being an associate professor of economics. And if Professor Alagidede is the priest, Dr. Abradotu is what? The catechist. So essentially, the value is the same, right? Well, they are the experts. They are the theorists. They are the practitioners. I am not here to even reiterate what they have said, because I'm only a linguist. And so for all of you who are like me, they speak one language. They spoke economics and finance. I'm here to speak some English, and then we will close. Indeed, I must admit that when I first saw the title, From Cowries to Crypto, I wasn't sure exactly what to expect, as both terms in different contexts connote interesting things. But whatever conceptions or even misconceptions that we brought to this lecture, I believe that this afternoon we have been treated to a sweeping, scholarly, and stirring account of Africa's monetary history and future. His lecture managed to be deeply intellectual, boldly visionary, intriguingly poetic, reflectively spiritual, and surprisingly easy to follow, at least most of the time. So I would say that, Professor Alagidede, you've not only taken us through centuries of monetary evolution, you've also dared us to think differently. Because really, if you want different results, we have to try to do things differently. You've dared us to believe more in our resources, our realities as Africans, and our ingenuity, and that these are sufficient foundations for economic sovereignty and transformation. That was my interpretation of your lecture. I would say that I particularly liked the introduction of new terms like metanomics, quantum physics. Did you hear that, if we were listening closely? And endogenous resource-backed currency. As a linguist, I'm tempted to ask whether you are considering collaborators for a glossary. I would willingly volunteer my services. Even in the absence of the governor, I would like to thank him for his own speech. It had deep insights which even preempted some of the recommendations that our lecturer gave, particularly regarding the launch of a digital currency. When he got back to his seat, he got a whisper that he needs to come back to the classroom. I have no doubt that the classroom will benefit from his amazing expertise. But I'm also sure that the economics of our classroom remuneration will get him running back to where he came from. Let me extend our appreciation to our discussant, once again, Dr. Abraduotu, for adding some depth and perspective to this afternoon's discussion. For your summary, so you did part of my work for me, I don't have to worry about that. For your summary, your critique, and your suggestions. We are very grateful for that. That is the essence of this chair, for academia and practice to collaborate so that we can get the very best policies which are implementable in our context and in our economy. I would like to thank the bank for this bold and forward-looking partnership. As we have said again and again, this chair is not just an academic title, and it's a platform for relevant, impactful, and innovative scholarship. And judging by today's performance, we may need to brace ourselves for more paradigm shifts and perhaps new currency proposals, especially as we mark the 60th anniversary of the Cedi. I also would like to appreciate our moderators who ensured that the train stayed on track. Thank you very much. And also to all of those who contributed to the seamless organization of this event. As we leave here this evening, let's remember that Africa's story cannot continue to be told in someone else. That Dr. Asiama has the exchange rate, but Abochi has the dollar. I guess I would have to wait for another event to get that response. Thank you all for being part of this important occasion. Please do enjoy the refreshments and note that all is free. No cowries, no crypto will be required for payment. Have a wonderful evening.
Thank you, Madam VC. Oh, let's add another one. Thank you. Thank you very much, Professor. Thank you. We are ending soon, and at this point, we'll call on Dr. Emmanuel Abbey to give us the vote of thanks.
Good evening, everyone. Madam VC permits me to stand on the existing protocol. First of all, on behalf of the Department of Economics and Finance, and of course, on behalf of the organizing committee, I would like to thank God for the success of this inaugural lecture. Madam Chairperson, I would like to thank you for your inspiring leadership and your unwavering commitment to academic success, and for gracing this particular inaugural lecture. Again, to our special guest of honor, Dr. Johnson Pandit Asiama, we are sincerely grateful for your insightful reflections and the bank's vision in establishing this prestigious chair of the Bank of Ghana Chair of Finance and Economics. We deeply value the ongoing partnership with your esteemed institution, and we'll definitely come back to you and ask for more. To our keynote speaker, Professor Yegandi Imhotep Alagidede. We thank you very much for your inaugural lecture. It has been truly inspiring, and it has helped us to reimagine the foundations of monetary policy, its sovereignty, and innovation in Africa. Your work continues to inspire us all, and as students of metanomics, we'll continue to learn a lot more from you. And indeed, we'll know the direction of where the monetary policy heading towards, from cowries to cryptocurrencies. We also extend our sincere thanks to our distinguished discussant, Dr. Philip Abredu Otu, for your valuable insights and contributions to this intellectual exchange. Our deepest gratitude also goes to all provosts of the colleges here present, the organizing committee, the moderators, senior members, team members, and staff of the Bank of Ghana, and of course the governing council of the Bank of Ghana. We also thank the Ghana Dance Ensemble for enriching our gathering with a stirring cultural performance. To all the students here present, faculty, industry players, and every participant, those present here and indeed those who joined us online, we thank you for the engagement, and we thank you for the comments. I know there are a lot of distinguished dignitaries here. I will not attempt to mention any name and miss any of them, but we thank you all for gracing this occasion. As we move forward, may the vision and values articulated today continue to guide the progress of the chair and strengthen the partnership between the University of Ghana, the Bank of Ghana, and all stakeholders. Let us all take these seeds of knowledge and sow them for a flourishing, inclusive future for Ghana, Africa, and the wider world. Thank you. Travel safely and enjoy the rest of the day. Of course, there is refreshment, and as Madam VC has said, you don't need to pay any cowries of cryptos for the refreshment. Thank you very much.
Thank you, Dr. Abbey. We'll take our announcement, but before we do that, we'd like to recognize the presence of Professor Justice Baule, the immediate past dean of the University of Ghana Business School. Please give us a wave. What we are witnessing here today, he played a very key role. We appreciate you, Professor Justice Baule. When I introduced my HOD, I made something very important. Yesterday, something wonderful happened. She got elected as UTAG National President. Yes. So, Professor Vera Fiado, yesterday, your boys, we were very happy. We hope very soon we'll go to the bank smiling with you as our president, and we hope Through your tenure, you drive policy through research and analytical work. We wish you well in your leadership. At the end of the brochure, you see call for papers, African Review of Economics and Finance, which is one of the initiatives of Professor Alagidede. So he is leading this conference. It will be hosted here. Our PhD students, please submit your papers. Our BOG colleagues, it will be a great session for us to interact and discuss research that will drive policy and economic growth. So kindly take a look at our 2025 African Review of Economics and Finance Conference. It's also noteworthy to mention that the Cedi conference will host the secretariat. So our dear student, Professor, will be up there. His office is up there. You can always walk in, and I can bet you he will receive you warmly and appreciate your thought. So the Cedi Conference Center is hosting the Secretariat for the Bank of Ghana Chair in Finance and Economics. When we close, please, students, you stay here for your item 13. Seminar room 2, BOG directors, HODs, deans will go to seminar room 2, and our VC and our provost and our inaugural lecturer will go to seminar room 1, together with the directors and advisors of the board. On this note, we thank you very much, and we are grateful for coming. We will stand up and take UG National Anthem, after which we will take the UG Anthem, after which VC and those in front.
University of Ghana, the nation's hope and glory, the place that lies the star of peace and peace and soul to do our best in the praise, tower of many, is my both young and old. May we proceed in unity to uphold the public cause. Arise again, Lord, defend the cause of freedom, proceed into the integrity to make our nation proud.
Thank you very much. So, please, let's wait. We also recognize the presence of Professor Bob Watson, the Vice-Chancellor of Methodist University. Please give us a wave. All right. Thank you. Thank you very much. So, BOG staff, UG faculty, please meet at the foyer. With all humility, thank you very much for your coming. And yes, please. So, BOG staff at the foyer and faculty at the foyer. Student, please wait. Okay, so faculty